Welcome back. The KRE Regional Bank ETF is down more than 7% in the past month, as we've seen an uptick in warnings around commercial real estate again. Moody's recently put 6 U.S. regional banks on downgrade review due to commercial real estate exposure. PIMCO sees another wave of bank failures. Banks have become more cautious and have pulled back on commercial real estate loans, and that's where one startup is seeing opportunity. iBorrow is a private commercial real estate lender that provides bridge loans for commercial real estate properties, $2 billion worth so far. And the founder is standing by live with Tyler in Southampton. Tyler Mathisen. It's great to see you, but Tyler, it looks beautiful. It's hot, though. It's lovely to see you, and I'll hand it over.
Oh, it's not hot here. It is not, when you're in the Hamptons, it is always cooler in every way. This is called the Uncharted Summit. It is a sort of conclave, annual conclave of founders and funders, basically people who want to put money to work and young companies or startup companies that are looking for capital to build. So it's builders and buyers, if you will. By the way, I've never seen so many white jeans in my life. If you got white jeans, this is where you wear them. Our guest is Harlan Peltz. He's the founder and executive chairman of iBorrow. Harlan, welcome. Good to have you with us.
Thank you. Thank you for having me.
Your company is young, 10 years old or thereabouts. It's not a
young
startup,
10 years, yeah.
But it's a young 10. You look a lot younger than you are.
I feel it.
Let's talk about something that John Murray of PIMCO said, and that was yesterday, I believe, to Bloomberg. The real wave of distress is just starting in commercial real estate. Do you agree with that? And does that, in a curious way, advantage a company like yours that sort of plays in the gaps but that have been left by banks?
Yeah, I mean, I think what's happened is there's the discussion around commercial real estate has really conflated office properties with commercial real estate generally. Commercial real estate spans a range of property types, and office is one of those, and it's a troubled asset type right now. But as you point out, we lend to multiple segments within the commercial space. So a lot of multifamily,
residential, multifamily, industrial, retail, et cetera.
And they're all doing quite well, and we're finding real opportunities. And to your point, banks have pulled back, traditional lenders, and so we, along with other private lenders, are starting to fill that gap in a very meaningful way.
Are you finding opportunities, curiously? Everybody's talking about and trashing office properties. That's sometimes when you find the best opportunities.
That's true. We happen not to be doing more office at this point because when we sit with our investors and partners, it tends to hijack the conversation. But you're absolutely right. There are very specific, interesting opportunities within that space.
You are part of this new world, or relatively new world, of private lending. You've got private credit, private lending, which is kind of what you do. Why has it grown so quickly?
I think it's grown because it offers great value both to borrowers, solves very specific borrower needs, and it's great for our capital partners. And because of that, that's really explained the growth of private lending generally, because it does deliver those benefits, and I think it's going to continue to deliver.
So your partners, your investors, that's where you source your capital?
Correct. So we co-invest our capital with large institutions, including places like Oaktree, which is one of our largest partners, and other institutions, big insurance companies, big family offices. So we do commingle our capital. We are not an asset manager. So our partners pay us no fees of any kind. We co-invest together, which tends to align our interests with theirs.
So let's talk a little bit about the stress in the mid-sized banks. Kelly just mentioned that Moody's has put several banks on watch for credit downgrade. Some of the big banks have pulled back out of commercial real estate. Are you worried about those mid-sized banks? And again, coming back, does that provide an opportunity for you? If they're pulling back, that's where you can come in.
Absolutely. There's a massive funding gap that exists just to finance maturities. Many maturities that were supposed to be played out last year have rolled over into this year because the financing that is available is largely absorbing refinancings just to push the can down the road. So there's a massive wall of maturities that now needs to get financed. And as a result, there's a funding gap
Is there a refinancing crisis that's coming quickly?
I think there's a refinancing challenge. Whether it's a crisis or not really depends on where the loan basis is compared to value.
Harlan, we have to leave it there. Thanks for your time today.
Thank you for
Enjoy the rest of the day. It's a beautiful day out here, and it's always cooler
in
the Hamptons.
Thank you so much.
Harlan Peltz.